Hello everyone, and welcome to another educational presentation delivered via webcast, brought to you by the Storage Networking Industry Association, or SNIA as we call it. And today we're going to be talking about a subject that I don't think we've covered before from a storage perspective, and that is cyber insurance. So let me start with a quick introduction. My name is Paul Talbot. As a contractor, I have a number of roles within SNIA, most notably with the Data Protection and Privacy Committee, but I also act as a coordinator for SNIA's regional groups in both Europe and India. My role today is to act as a moderator for our subject matter experts, Casey and Eric. So let's do a quick sound check. Casey, would you like to introduce yourself?
Yeah, thank you, Paul. Hello, everyone. My name is Casey Boggs, President of Reputation Us. We deal with the reputational side of a cyber attack, typically before, but a lot of times during an attack, and what that ramifications are for insurance and protecting the common good of the company. So thank you.
Great. Welcome, Casey. Eric?
Hi, Paul. Very early morning to you in Australia.
Thank you.
So I actually am involved with SNIA as well. I chair the Security Technical Work Group. I'm also very active in both cybersecurity and privacy standardization in the international arena, ISO in particular, as well as IEEE. And cyber insurance is one of the areas that has been of interest in there. And then I also do some work with the American Bar Association, so I have an opportunity to work with a lot of legal folks in the United States. And again, cyber insurance is a topic of interest in that space.
Excellent. Well, thank you, Eric and Casey. Thank you for your time today. For the purposes of the audience, let me just start with a few key points regarding the BrightTalk interface, especially for those of you that may not have been with us previously. Firstly, you can expand the screen size. It may be important if there are details that are in small print as we go through the presentation. You can go to full screen mode. Secondly, it's important that we get questions, so you can ask questions along the way. And I'll be monitoring those, so if we get some interesting points from the audience, I'll certainly be putting those to the panelists today. There'll be an opportunity to do that. And then finally, if you want to take a look at the slides themselves, if you click on the attachments selection, you'll be able to get hold of the presentation as a PDF. And then finally, and I'll remind you as we get to the end of the presentation, it's very important that you rate the presentation. This is important to us because it gives us an indication of whether we're delivering the right quality and content to you. So please rate the presentation at the end of the session. A score of 1 would mean that you'd rather have spent the time more wisely, and a score of 5 meant that it was pretty much perfect for you. So we appreciate you doing that. And then finally, you can send us comments and feedback, and I'll be putting up some contact details as we get to the end. So let's press on with the presentation. So just to cover the standard SNIA legal notice, this is a standard disclaimer from SNIA, and the purpose of this is just to remind you that this is SNIA copyright and to detail the conditions under which you may use this presentation. But also importantly to express the fact that we're not giving you any legal advice here, not providing any warranties either expressly or implied, and the use of the content of this presentation is at your own risk. So a quick few seconds on SNIA. For anyone who doesn't know who we are, we're a global not-for-profit association. Our job is to advance the adoption of storage technology in all its forms. We use our vendor-neutral status to develop industry-wide standards, and we use our subject matter experts, such as Casey and Eric, in our membership community and use those guys to provide a lot of high-quality educational materials. And then we provide those programs to hopefully aid the adoption of storage technology in the marketplace. We also provide a lot of educational materials, and these are designed to help the storage user community to better understand the implementation and deployment challenges. And these educational materials take quite a number of different forms, including speaking at conferences, but equally importantly, doing webcasts such as these. So a quick mention about the sponsors for today. This presentation is brought to you by a specific group within SNIA, the CSTI, Cloud Storage Technologies Initiative. These folks are one of the many forums and initiatives within SNIA, and it is the place to be if you want to know more about what's going on in the world of cloud storage. This group is responsible for some important standards and specification in this area, and do a huge amount of work in education and getting people to understand more about cloud storage technologies. So today's agenda. We're going to be covering areas such as business risk. Eric will tell us all about cyber insurance and the reasons to consider it. We'll take a quick look at data breaches and use Casey to tell us more about reputation and brand image and issues after data breach. We'll look at the considerations for insurance as well, the types and coverage of insurance, exclusions and excesses. That should take us around 25 minutes, and then we'll dive straight into a panel discussion, and hopefully we'll get some interesting questions from the audience that I can post to the panel. And then finally we'll wrap up with some summary and key takeaways. So without further ado, I'm going to hand over now to our subject matter experts, and I'll start with Eric Hibbard. Over to you, Eric.
Thank you, Paul. So I'm going to take you through a bit of a whirlwind tour to talk about risk, and I can't guarantee you could get any sort of risk-based certification after this, but hopefully you'll have at least some working concepts, if you will. So when engaging in a dialogue with a carrier for cyber insurance, you're all but guaranteed that the concept of risk is going to come up. And interesting enough, they may talk about cyber risk and cyber threats and cyberspace as opposed to just sort of generic risk and threat. So I've got some definitions here. These are actually from one of the fairly new ISO standards, the 27102, which is the guidelines for cyber insurance. So you can see it's really focused on threats that are coming in essentially off of the digital world or off of the internet. On the right-hand side, and I apologize, the graphic is probably a little small. This is a diagram that ISO has put together quite some time ago, but it does show some the interactions between risk and threats and threat agents and how all this stuff sort of works. And you could actually probably do a full day just talking about how all the components of this and how they work. But in general, this is an important aspect of getting cyber insurance. There are frameworks that exist that will help you sort of get your arms around this whole set of risk issues that you got to deal with. Sort of choose your poison, if you will. I was showing a couple of documents from the ISO space, and so that's one of the frameworks. NIST, which is a U.S. government activity, it has a framework that can be leveraged as well. One of the advantages to using NIST is the documents are freely available and readily available. You just have to sort of adapt your model to kind of the approach that the U.S. government has taken. But free is good. And then COSO is another risk management framework that sometimes gets used. Any one of these is fine if you don't have a framework that you're using as a basis. Having one will save you a lot of time and energy, trying to get your arms around the problems. Typically, for cyber insurance, you'll need at some point to do some level of a risk assessment. The complexity is going to be dependent on how large your organization is. After you do a risk assessment, you basically take the results, findings, if you will, and then you have to basically deal with those in some fashion. And if you take no action, there's an assumed that's an assumed decision. Okay, so basically you got to deal with risk treatment. So there's risk avoidance. So this is, you take steps to sort of mitigate it, you eliminate it. Risk transference, and that's part of what we're talking about today, as well, I'm going to share it with somebody. Well, that, potentially insurance. Risk reduction is you've taken some steps to minimize your exposure. And then risk retention is if you do nothing, you're basically saying, I own it, but maybe you're putting your head in the sand, taking no steps. And there's always some sort of residual risk, and then this process sort of repeats itself. You make adjustments and sweep back through this. And this is essentially an important process when you're dealing with the world of risk. So, this is an iterative process. Part of the reason for that is you really want to focus on the elements of risk that are highest impact and highest probability. So if you think about this as quadrants, the upper right-hand quadrant is basically what you want to focus on. So what am I likely to really get hurt by? And start with those. And then over time, if you've taken care of all those, then you move into sort of the medium risks, which, might be high impact but low probability, or high probability but low impact. And then, you sort of work your way through what realistically, makes sense to do. In some cases, it's just not possible to eliminate all risk. But this is a general sort of guidance on how to do this. As I said, it's very much an iterative process. All right, so that's Risk 101, and let's move on and talk a little bit about cyber insurance. So there's some things that so first of all, you're responding to cyber-based risks when you look at a policy like cyber insurance. These policies are often or can either be basically standalone, or they may be a special endorsement. So you may already have coverage, and then the carrier you're using, you may be able to actually get a rider or a special endorsement, so it give you additional coverage. There's really no standard flavor of these. The coverage varies significantly. Variances can actually come into place by there may be limitations imposed by local jurisdictions or maybe the country. It's driven by market practices. So if the threat landscape changes significantly, I know when we saw ransomware start becoming more prevalent, that definitely got the attention of many of the carriers, and so they sort of reevaluated how they were approaching things. So they're business decisions that insurers are making, and sometimes they decide that they're all in. They're going to do this in any way they can, and others are not so sure that they want to do it. And then of course there's what are your specific needs? Okay, so why should you consider cyber insurance? Well, one of the interesting outcomes is if you go through the process to actually, unless you just basically go in and sign a blank check, which is typically not recommended. When you go through a process like this, you end up establishing sort of a dollar value for your organization's cyber risk. So in other words, you're sort of quantifying what your exposure looks like. And even if you choose to not buy cyber insurance as a result of the process, you at least have somewhat of a handle on your exposure. It also is part of the process, because we were talking about risk just a couple of minutes ago. Most likely you're going to gain some insight into your cybersecurity posture, and you're going to understand gaps and things that you could potentially do to improve your situation. And then I guess as a third element is a lot of the insurers have quite a bit of experience. They have tools that can help you, especially small and medium-sized businesses, sort of get your arms around various aspects of the problem, especially dealing with things like incident responses and whatnot. They may be able to actually help in areas that you may be have no capability, or you're fairly weak in your current situation. All right, so let's talk a little bit about the kind of coverages that are possible. These are not all guaranteed. So obviously liability is one of the things that's definitely going to be discussed, and this is basically indemnifications of losses to other parties. You can have incident response costs, so dealing with things like loss and thefts, or damages to information, the reputational pieces. The list is fairly extensive. This is definitely an area of most of the cyber insurance will have an assortment of things that are covered. Cyber extortion, I mentioned ransomware. This is definitely on the insurer's radar scope, so to speak. There is a twist to this, however. Certain jurisdictions may actually limit what can be paid out for cyber extortion. In other words, there may be a prohibition to doing payouts, and if that's the case, that may affect what kind of coverage you can get. Business interruption. So this is a loss of income or loss of profit, or increased operating costs as a result of the cyber incident. Then there's the fun with legal and regulatory fines. So if you're tracking in the privacy space, there are lots of things that are happening there, where if you have some sort of indiscretion, that can result in significant penalties. So those can potentially be covered. Again, this is one of those areas where there may be jurisdictional restrictions on permitted coverage, so you need to pay attention to those. Contractual fines and penalties. So if you didn't fulfill your contractual obligations, there may be penalties for that, and that there may be coverage for those. And then system damage. So there were some attacks that happened a while back that basically could brick a PC. In other words, it was absolutely useless, could not be recovered, and it was a result of a cyber attack. So how do you? And if you're talking about thousands of PCs, that's a substantial cost, and so some of that can actually be covered here as well. Okay, so there are lots of different kinds of incidents that can happen. In the context of insurance, cyber insurance, they typically talk about things like system malfunctions. So there's some sort of issue, maybe you've got a network, you've got a defect or something that's the result of, results in having an impact to your organization. So that may not actually be a direct attack per se. It might actually just be a failure of your technology or somebody's technology. You could actually have a data breach, and this is where some data that's basically been stolen or exposed. In some cases, just simply exposing it's enough to cause you difficulties from a regulatory standpoint. You could actually have corruption or deleted data, and have denial of service attacks that limit your ability to operate or severely diminish it. There are other malicious activities. There's things like cyberbullying, so you could actually have an employee that is being bullied or is the bully, and could cause problems. There could be phishing attempts that result in issues. You could have, a variety of cyber fraud kinds of activities that plague your organization. And then there's just the flat-out unintentional, mistakes and errors. These are all kinds of things that could exist and could potentially be covered. So at this point, I'm going to turn it back to Paul, and we're going to talk about the impact on reputation.
Thanks, Eric. Thanks for that introduction. I'm going to just pause there and just remind our audience that we have opportunity to ask questions. We've got one or two coming through already, which is great. So we'll get to those at the end of this session. I'm going to introduce Casey now to talk about impact on reputation. Casey?
Great. Well, hello, everyone. Yeah, if Eric doesn't have you scared a little bit by now about risk, I want to come in to do more damage, if you will. But reputation risk is what I'm going to be discussing today. It's really the intangible, hard to quantify business commodity, especially on the insurance side, for sure. But when it comes to cybersecurity and insurance, reputation damage is typically only addressed post-mortem. It's frankly hard to quantify the reputation damage after an attack. What's lost and the trust and the confidence. These things are very hard to get back. Other things you can, potentially monies and data, those types of pieces, but the confidence and trust you have with your staff, your consumers, that's the tough one. That's very hard to put a dollar value to. So I'll discuss the importance of addressing reputation before a cyber attack and what we can do to mitigate against such damage. So let me forward my slide here. So Warren Buffett, the man knows a thing or two about corporations, right? One of our favorite and most applicable quotes is, "It takes 20 years to build a reputation and 5 minutes to ruin it." And if you think about that, you'll do things differently. And it's a direct quote, and so it's something we believe in. But when investing and really trusting his investments, he looks closely at corporations' reputation, more specifically the reputation of the corporation's people, products, and processes. And while he's never called out cybersecurity per se, I imagine he or investors would think twice if a company didn't handle a cyber attack very well. So I just bring this up to you because it is a real thing. It's intangible. It's hard to wrap your arms around, but most corporations value reputation in so many different elements, and it's one hard enough to crack, but we'll kind of dissect this a little bit further here. So I want to share with you a cybersecurity survey that we conducted during Cybersecurity Month. And yes, there is a Cybersecurity Month. It's in October every year. Mark your calendars. But our firm conducted an extensive survey that examines the effects of cyber attacks on corporations' reputation and consumer confidence. Now, the infographic you see right there might be tough to see, but maybe you can get this afterwards. But I will uncover some pretty obvious findings, but some eye-raising stats as well. But one takeaway that we found from the survey is that consumers expect, actually really they demand, that corporations do a better job at protecting their valuable data. Otherwise, they'll walk. And these are the vulnerabilities and cyber incident types that Eric just discussed. And it really is the consumer is looking at you as an organization to say, hey, do you have our best interest in mind? And they're paying attention now more than ever. So one of the findings here is that, or at least a glaring stat from our survey, is that when asked who consumers blame for an attack, 54% say they blame the hacker. The other 46% they blame the corporation. That's nearly a 50-50 split. Almost half are blaming the company after an attack. So that caught our attention. And although it's easy to blame the malicious actors out there, and they're faceless, their identities are hard to track, and we can all, give them the high sign on, what we think about them. consumers are now more importantly looking at you as the companies that make sure that you are protecting them. And insurance can only go so far. And it's the pre-work that needs to be done. And another stat, or stats in which we want to highlight here from the survey, that 48% of participants said that they are unlikely to remain a customer after a cyber attack if stolen data was used to illegally set up a credit card in their name. 41% would leave if their credit scores were compromised. And then 43% would depart if personal or financial information was shared. So what we're saying here, now that I got your attention, but hopefully not scared, is that there's fairly simple steps companies can take, to really look at this and say, hey, there's a lot riding here. Now, insurance can only cover so much, but once this information is out there and the attacks have happened, what are we going to do? And there's a lot at risk here. So it's not only hitting your reputation, it's hitting your wallet. And so there's some fairly simple steps that we outline here that that in conjunction with insurance, but also too with your IT, your legal, and really the PR teams, what you can do to mitigate against damage. So I'll walk through each one of these fairly quickly, but it gives you enough context as far as what I mean. So plan for an attack. Actually plan for different levels of attacks. We like to color code these attacks by risk. So similar to what Eric just outlined as far as the risks are concerned, we do the same thing from a reputational side and a legal side. So a yellow would be a low impact attack, orange would be a moderate impact cyber attack, and then the red would be all hands on deck, houses on fire attack. But these varying degrees of attacks are really looked at from a company and size-wise. But the key is to be prepared and not to underreact or overreact, because how you react is also has some bearings on reputation and potentially other further damage. But bottom line, there's too much at stake here if you handle it lightly. And then to simulate the attack, we're brought in early, a lot of times with the insurance companies. We've been vetted out by quite a few carriers to say, all right, before this actually happens, how about doing a simulation? Planning for it, but simulating. So the color-coded that I talked about, well, they bring in the IT team, the legal side, as well as the public relations side, our side, is to make sure that you're corresponding accordingly. So you're taking care of the problem, the attack, and you're negotiating potentially with the malicious actors. And as Eric mentioned, ransomware and extortion is a real thing. Part of things that we've been privy to that has to be addressed. So everything from if, when, how you're negotiating to what's the ramifications of when you notify your consumers during an attack. All this plays into perception and how you are handling an attack. So we look at it from a simulation side. And then really throughout the ordeal is how you're communicating. So there's one team that's designated or deputized to protect yourself and get the IT back up and running. But from a communication side, it's really key. How you communicating internally, how you communicating to your consumers, how you communicating to the constituents. All that is should be doing this ahead of time so you can have some rhythm, some understanding on how this actually is going to unfold itself before an attack happens. And we've seen, when we come in, we've seen those who have done this and those who have not done it, and there's a huge gaping hole of those who are fumbling during a valuable time during an attack on preparation. And as I mentioned earlier when I started, is that insurance typically covers reputational after the fact, and that's again very hard to quantify. But what if you are prepared ahead of time to mitigate against that? And that's what we're advocating here. So that is the reputational side. So I want to turn it back over to Paul. And by all means, please send questions, but I'll send it back over to Paul about the cyber insurance considerations.
Thank you, Casey. Interesting. We're kind of getting both ends of the spectrum here when Eric is talking about risk being, managed right at the front of the process, and you're talking about reputational damage after the event. So it's quite a broad spectrum. Thanks, Casey. Again, just a reminder, send those questions in. I'm just going to ask Eric to talk briefly about insurance considerations. Eric?
Yeah, so I'm gonna touch on some of the finer points, and the purpose of this is I'm going to go through it fairly quickly, but the intention is to give you some insight into some things to pay particular attention to and to actually consider. All right. So first up, I'm going to talk a little bit about policy triggers, and at a conceptual level, what we're talking about here is when does the coverage kick in? So if something's happened, there's an incident underway, when are you covered and when are you not covered is really what you're trying to understand. And this is probably one of the biggest issues, besides cost, of what you're actually getting. All right. So you want to make sure you understand exactly what triggers the policy. And in many cases, it's when a claim is first made against the insured. Right. So this might be a lawsuit or some sort of document or whatever. But in many instances, this is actually occurring after the incident. And the problem is that because the claim has happened after the actual incident, and that if that's the trigger, then you may be in a situation where all of those things that you did to mitigate the incident may not have served as a trigger, and they may not be covered. All right, so you could be knee deep in a data breach, but until the policy is actually triggered, all those expenses may not be covered. And so this is a huge issue to keep an eye on. All right, and the underlying detail is the element of time is basically the critical component here. When are you covered? And if you haven't actually considered that, or if you haven't thought about when do you want the policy to kick in, then that's something you probably should get your arms around before getting too far down the path with your potential provider. Okay, so the next area to consider is the use of experts and vendors. Unless you're a very, very large firm who's constantly under attack, you may not have a lot of in-house experts, or you may have a lot of them, but they may be busy, and so you may be in a situation where you need to have access to some third parties to help you deal with it, whether that's special legal help or vendors that are, for example, dealing with forensics and whatnot. This is an area where you need to make sure that you've taken steps to basically identify who your experts are. You may need to include those in your incident response plan. Your incident response plan is often factored into any sort of dialogue that you're having with your insurer. So, but the key thing is to make sure that you've in advance identified any of your experts or vendors that you plan to use, and make sure that your insurer is on board with that. I mean, that's the bottom line, because if you don't take that step, you run the risk of having all of those expenses excluded, and they could be extensive depending on the nature of the incident that you're dealing with. All right, so the next area to pay attention to is there are lots of policy exclusions. So, for example, bodily injury and property damage. So first and third party bodily injury and property damage from a cyber incident are usually excluded under the cyber insurance policy. They're typically covered under other policies. So if this is your only insurance, you may have many components that aren't really covered. You don't treat these as the all-encompassing kinds of policy. Terrorism. This is an area where there can be some creativity on the insurer side. So you want to make sure you understand exactly what's being flagged here. So the exclusion is if it can be identified as an act of terrorism, then you basically it's not covered. So if that's part of the policy, you want to make sure that it's anchored to something other than somebody says, oh no, that's just an act of terrorism. So you want to look to see if is it anchored to something that the U.S. government officially declares as an incident, as an act of terrorism or cyber terrorism. So if the U.S. government declares it as such, then it's covered. Or not, it would be excluded. But if it's not in that context, then what you don't want to do is have the insurer basically make a declaration of its terrorism. So look carefully at this, and in many cases, you've got an opportunity to do some negotiation on this. Likewise, there's acts of war, and again, you want to tie this back to those that are recognized by United States government or United Nations. So these are nation-state kind of exclusionary kind of things, because there's no real definition of what constitutes cyber war, right? And so this is an area to pay attention to, because if it's written very loosely, you may find that the insurer, especially if it's a really, really expensive breach, has an out that isn't in your best interest. Another area is insider threat, and this will often show up. And if you're familiar with a lot of the discussions around what are the most damaging breaches, what we're finding is some of the most damaging are actually perpetrated by insiders. They're not necessarily the most frequent, but when they do occur, they're pretty nasty. In this case, what you're looking for is if all insider threats are basically exempt in the policy, you may want to rethink that. If you have an opportunity to sort of adjust that, but they won't make it go away, well then focus on your directors and senior officers as sort of the exclusion, but for the normal workforce, they would be covered. So that's the kind of thing to pay attention to on some of these exclusions. There's some more here. Territorial limits. It's important to understand whether it's restricted to just the United States, because if you're a multinational, you think you bought a policy that covers international space. That may not be the case. Intellectual property may actually have a huge exclusion. So loss or damage to your intellectual property, you may not have any coverage at all. Confidential information that you're holding, but it's not yours. There may be no coverage for that. And that may be a problem for you, because if you're the result of a data breach, that third party may be coming at you for that data breach, and the insurer is not going to cover any of that. Acts of God. This one, you want to take a hard look at what is actually said there, and try to negotiate as many limits on this as you can. In other words, if they're excluding everything that you can imagine, this is an area to definitely focus on it. It's also very common to see that bring your own device and unencrypted kinds of technology that you're using are an exclusion. So you need to basically pay attention to this. And then back to what Casey was saying, there are many insurers who are really afraid of this reputational angle, because it's very much an intangible, and so again, when you're talking about insurance, you're basically putting a value on something, and so in many cases, they'll just start off in a position where they don't want to cover that. A lot of this is negotiable, but you've got to know up front that you need to negotiate it. So then there are possible excesses or deductibles, and this is, again, another one of those things to pay attention to. So you want to understand how much you have to pay before, even if the policy is triggered, there may be a certain amount that you have to pay before the insurer steps in. This can be an important detail because, as with your auto insurance, your deductible will drive what your policy costs. So this is one of those to definitely pay attention to. There may also be aggregate limits. So there may be like a lifetime cap on if you've got medical insurance, something that many of us are familiar with. Similar kind of things. So there may be on a single event, or it may be for the total value of the policy. Definitely want to look at those kinds of things. Waiting periods. If you've ever had to go get flood insurance, there's often a 30-day waiting period. So, the water, you don't buy the insurance when the water is nipping at the door, so to speak. Well, cyber insurance has got similar kinds of situations as the insurers are pretty smart about not letting you purchase as you're being attacked kind of situation. But the amount of wait time can vary significantly, anywhere from a few days to could be weeks, right? There's also there can be limits on the length of business interruption that's coverage. In other words, the insurance companies are trying to understand their exposure. So if you have an incident, they may give you 1 week of coverage for an outage. But you could be subject to being, in some of these nasty ransomware, you could be offline for a month in terms of recovering. So this is one of those to pay particular attention to, because it may not be enough coverage to really protect you. Okay, so a few other things to keep in mind. If you have your security, in-house security sort of up to snuff. In other words, you've got your policies and your practices are in pretty good shape. It's actually going to have a positive impact on the insurance process. Insurers will look favorably on that. You may actually have more options, and you may actually get some discounts for having your house in order, so to speak. And the next item, and I mentioned, in the intro that I do some work with the American Bar Association, and I do work in the electronic discovery space. It's important to keep in mind that the communications that you have with your insurance broker or agent are not privileged communications. Many organizations are very, how they deal with security and security incidents is a sensitive topic. You may be conveying details that you've not conveyed anywhere else as part of working with your agent. And it's important to keep in mind that this is not like talking to a lawyer where it's privileged conversation. None of this is privileged. And so you want to make sure that you are delivering the right amount of information, but you've also got whatever necessary protections you need in place. So this, you may need to use non-disclosure agreements and things like that if there's anything really sensitive there. Okay, so that, again, that's a bit of a whirlwind tour, but these are definitely things to pay attention to. So with that, I'll turn it back to Paul. And do remember, you do have access to the slides. So if something caught your attention here, you can refer to the slides to look at a little more detail.
Great, thanks very much, Eric. I just wanted to get straight into panel discussion. We're getting some questions coming through from the audience, and we haven't got a huge amount of time, so I just want to dive into these quickly. The first question we got was an interesting one and probably obvious. How much does cyber insurance cost, either by example or hypothetical? And I guess from my point of view, the answer is fairly obvious in terms of, well, it depends on the value of the asset and the risk that asset is exposed to. But are we missing some nuances here? Eric, you mentioned the things that you need to look for inside the policy, but what other aspects can we look at that might make the premium more affordable without compromising the value of the policy?
Yeah, a lot of the, and by the way, it's an excellent question, and you gave, as I'm fond of saying, you gave the lawyer answer, which is absolutely correct. I mean, if you're buying a quote standard policy, remember I said there's no standard policy, so you're getting something off the shelf. The drivers are many of the things that I walk through fairly quickly. Deductibles, do you have your house in order? You depending on whether you accept the exclusions that they offer or whether you adjust those to limit those all will think of those as kind of a sliding scale on the price. It's almost like when you're buying health insurance. If you add vision and dental and all these other things, the cost can go up if you only cover yourself but not your dependents. You get this sort of variable. It's a very similar kind of situation, and what we've tried to identify here quickly is that almost every one of these things that we've identified has the potential of adjusting the rate up or down on what you would potentially have to pay.
Right. Casey, do you have a view on this? It depends. Anything that you've seen from your clients?
No, I was actually going to ask a question upon the question, but if there's some kind of bundled rate, like you brought up other insurance, with their own, car, home, those types of things, is cyber insurance a bundleable? I know it's that word.
Yeah, actually, it's a good question. However, those of us have had experience with insurance in other sectors. So let's say you've got automobile insurance, and then you have insurance for your house or renter's insurance. It's often convenient to get it, but is it the most cost effective? Not always the case. I know I own a motorcycle, and so my motorcycle is actually covered separately from my renters and my automobile coverage, because there was another vendor that was particularly good at that. And you're going to find that insurance, if you know what you need and the offering from your current carrier, the rider that they give you, the endorsement they give you, is a good match and it's a good price, then it's probably convenient to do that. However, don't just take it at face value that that's going to be the best path. And in some cases, it's not. There are specialty insurers who really understand this, and so and they may give you a lot more flexibility in terms of some of these exclusions and whatnot.
Great. Looks like we have some other questions as well.
Yeah, I was just looking at the second question here. Insurance companies don't like to pay out. I suspect making a claim is quite contentious. I've been sort of tracking on the cyber insurance for a while, especially in kind of a unique area in IoT, Internet of Things, because that was kind of a new area for a lot of the insurers. Early on, it was like, oh, this is cool. That's from an insurer's perspective, let's get in here. We can make a lot of money off this. And then it turns out, given all of the things that I talked about earlier, it's relatively easy for an insurer to basically say, well, you didn't do what you should have done. If you weren't patching your systems, your cyber hygiene was just not up to snuff. They really do have the ability to sort of step out of that. But it turns out...
But Eric, do the brokers have that level of knowledge to ask those questions?
Well, the brokers are often sort of just negotiating the policy, but when you make a claim, as with many insurance companies, the claims are handled by different individuals. So the people selling it are not the ones that are actually handling the claim. But the insurance companies have recognized that even though they could potentially avoid lots of costs, it's not in their best interest to do that, because if there's no payouts, it would become pretty obvious quickly that as an industry there were no payouts, or a particular vendor was notorious for not doing payouts, and they would lose all that business. So they're quite aware of that situation. Now, I haven't seen any sort of statistics on an insurer by insurer basis as to what their payouts look like, but other than really early on, where there was some commentary that emerged about this, it's really died down quite a bit. A lot of the insurers are doing payouts, and to the point that some are getting worried with this ransomware stuff.
Right. Casey, a question for you. Do you feel that cyber insurance is something that's only available to corporate organizations, or are you seeing this filter down to small to medium businesses, and how do they go about buying cyber insurance if you're a small to medium business?
Yeah, the quick answer is it really is available to everyone.
Okay.
Larger, and small businesses and others. So the rates will change, and they're obviously going to look at risks like Eric brought out, but it is readily available. And then if I can shed just a little more light on to what Eric said about the insurance company on that question about the payout, I do think that they are okay with paying out. It's a competitive business. Companies who are selling cyber insurance, although it's readily available, they do want to differentiate themselves, and if they're really either paying out or they're easy to work with, that's a good thing. And so the ones we've been seeing and we work with as well, they're incredibly responsive as far as the payouts and the lag behind that payout. I can't speak to, or at least on stats on how quick that is, but I do know that they are. It's a highly competitive business, and it's in their best interest to pay out in the event that there is an attack, and you are covered. So, for what it's worth.
Okay. Yeah, so Paul, just to follow up on that, I wanted to point out that the American Bar Association is doing an update on its cybersecurity vendor checklist. So this is small, medium-sized sort of legal firms dealing with their supply chain. And one of the changes we're making in that document is adding some guidance, some of what we talked about here today, on cyber insurance. So if you think about that, it's a 1 or 2 person shop all the way to maybe 50 people, and the recommendation is definitely consider cyber insurance for either your own activities or to check that your vendors have it in a way that would protect you if there's a data breach.
Yeah, I was just wondering whether the cost of cyber insurance puts it out of the range of most businesses, but clearly not.
Right.
Yeah. Okay. So I just want to explore this a little further in terms of how you get the best bang for your buck in terms of cyber insurance policies. And I'm interested in this concept of you talked about a dollar value on the asset, Eric. From a storage industry perspective, we're looking to protect data. That's our primary asset. Do you see any issues in businesses being able to accurately put a value on that data? It's a question for Casey as well, because I guess most of the reputation questions come from, well, you've lost my data, where is it, who's got it, etc. How do we address the situation of trying to put a dollar value on the data asset?
Well, there's a couple things that I've seen. Again, looking at this from kind of the storage angle. One of those is if you think about a data breach, what would the costs be associated with a data breach of, so a particular storage system? All right, so you're looking almost at thinking about a risk profile related to a piece of technology in your infrastructure. All right, so if you had something compromised, lost a drive or something of that nature, what's resident on that platform? If we had to essentially say, oh, look, there's all this, maybe it's privacy-oriented information, and what's the cost of dealing with that? It's, notifications, potential fines. So that's a factor of trying to put a value on it. Another facet of that is, okay, so let's say that we lost this particular, for example, storage system. What would be the impact to the business? Would we lose an entire line of business? And we saw, over the last 2 years, there were a couple of U.S. financial institutions that had some problems with some of their storage technology. And we saw, for example, ATMs went offline for several hours in, east of the Mississippi. That's a quantifiable kind of scenario.
Yeah.
So that's one way that you can start to get a handle on how do you put value on the data. So
Okay.
If I don't have it, does it impact the business? If I lose control of it, does that impact the business?
Yeah.
Yeah. Casey, any quick comments here?
Yeah. Quick comments is like, this is in a way where you simulate that. What if happened, to Eric's point, if you lost it, what would that value be to bring it back? And sometimes this is pressed very hard when the malicious actors are extorting you for money and saying, all right, we're asking for X, Y, Z amount of money for the data that we have. How much are you willing to pay for it? And those hard questions, how much is this data worth? And so simulate that by yourself and see what value that is, because essentially that's what's happening.
Okay. Well, unfortunately, we seem to be pressed for time. I'd really love to explore this for at least another hour. Eric, could you just very quickly summarize today's key points?
Sure. So basically, you really need to have some knowledge of the risks and business consequences that you're dealing with if you're really going to engage in a cyber insurance policy discussion, because you have to align your risk strategy with the risk acceptance criteria, and insurance is part of that, the overall sort of risk criteria. Keep in mind that cyber insurance policies, they're not going to cover all types of losses, and you really do need to understand what kind of risks are excluded, and we've talked about some of the things that could be there. Definitely pay attention to those. Insurers can require a certain level of security as a precondition of coverage. And they may actually want to have that verified either by a third party, or they may bring in their own personnel, again, depending on how large the policy is. And you may be required to actually meet those conditions during the validity of the contract. There are likely to be excesses or deductibles applied. This will impact how much payout you can reasonably expect. Need to know those. And last but not least, you should definitely consult with knowledgeable professionals before placing coverage. And that means your in-house IT. It's a key message. Don't just sign the check. Understand what you're getting into, and does it really meet your needs?
Okay, great. Well, thank you very much to our experts today, Eric and Casey. Thank you. Just to wrap up quickly, don't forget to rate this webcast and provide us with feedback. We will put a Q&A to answer your questions on our blog. The contact details are there in front of you if you wish to follow up with us. But other than reminding you to rate this presentation, I'd like to thank Eric and Casey for their time today. But more importantly, thank you to you, the audience, for being part of this SNIA presentation. and we hope to see you on future presentations in the near future. Thank you very much for being with us.
Thank you, everyone.
Thanks.